What's up, crypto traders? And welcome back to Boni's Life. I'm your host, Boni. And if you're watching this on June 9th, 2025, you're about to get the most precise 24-hour crypto analysis that could literally change your trading game today. We just witnessed Bitcoin pull off what traders are calling a God candle, a $2,000 surge in just hours, and I'm going to break down exactly what this means for your next 24 hours of trading. Now, before we dive into the technical triggers that could make or break your portfolio in the next day, let me tell you something that most YouTubers won't admit. The crypto market doesn't care about your weekly predictions or your monthly forecasts when you're day trading. What matters is the next 24 hours, the next technical level, and the next catalyst that's going to move prices. And right now, we have the perfect storm brewing with CPI data dropping Wednesday. That could trigger what analysts are calling a 70 to 170% surge in Bitcoin. So grab your trading platform, clear your schedule for the next 20 minutes, and let's dissect exactly what happened in the past 24 hours, and more importantly, how you can position yourself for what's coming next. And hey, if this analysis helps you catch the next move, smash that like button and subscribe, because we're building a community of precision traders here, not just hopeful hodlers. Let's start with what just happened, because if you blinked, you missed one of the most significant 24-hour periods in crypto this month. Bitcoin went from consolidating around $105,500 to exploding up to $107,749 in what can only be described as a textbook God candle. For those of you who might be newer to crypto trading, a God candle is when the price moves so aggressively in one direction that it creates a massive green or red bar on the chart that dwarfs everything around it. This particular God candle happened between Sunday night and Monday morning, and it wasn't just random. The technical setup was perfect, the fundamental catalysts were aligning, and the smart money was positioning for exactly this kind of move. Bitcoin moves from $105,525 to $107,749 in a matter of hours, representing a $2,224 gain that caught most retail traders completely off guard. But here's what's fascinating about this move. It wasn't driven by some random Elon Musk tweet or a surprise regulatory announcement. This was pure technical analysis playing out in real time. Bitcoin had been forming what we call a bull flag pattern. And when it broke above the key resistance level at $106,851 with significant volume, the algorithms and institutional traders piled in all at once. The volume data tells the whole story. We saw over $2.1 billion in trading volume on Bitcoin USD pairs during this move, which is a significant spike compared to the previous week's average. When you see volume like this accompanying a breakout, it's not just retail FOMO, it's institutional money moving in size. And that's exactly what we're seeing with MicroStrategy announcing another $110 million Bitcoin purchase just hours after this move. Now, let's talk about what this means for Ethereum, because ETH has been the quiet performer in this whole setup. While Bitcoin was making headlines with its God candle, Ethereum was methodically testing the $2,540 resistance level. As I'm recording this, ETH is trading at $2,527, up 0.7% in the past 24 hours. But more importantly, it's showing signs of a potential breakout that could be even more explosive than Bitcoin's move. The key thing to understand about Ethereum right now is that it's been in a consolidation phase between $2,490 and $2,540 for the past week. This kind of tight range trading usually precedes a significant move in either direction, and the technical indicators are suggesting that move is going to be to the upside. The Ethereum ETF inflows have been absolutely massive, with a 15-day streak of positive inflows totaling $295 million just this week. What's particularly interesting about Ethereum's setup is that it's showing relative strength compared to Bitcoin. While Bitcoin needed a God candle to break its resistance, Ethereum is grinding higher methodically, which often indicates more sustainable price action. The daily active addresses on the Ethereum network hit 1.2 million on June 7th, which is a parabolic surge in network activity that suggests real fundamental demand, not just speculation. But let's get into the altcoin action, because some of the most explosive moves in the next 24 hours might come from the smaller cap coins. Solana has been the standout performer, up 2.89% to $154.06. SOL is holding above the critical $152 level, and if it can break above $160, we could see a rapid move toward $180 according to the technical analysis I've been studying. XRP, on the other hand, is showing some weakness, down 0.75% to $2.25. But here's the thing about XRP that most people don't understand. It often moves independently of Bitcoin and Ethereum, especially when there's regulatory news or speculation about ETF approvals. The recent court filing buzz and spot ETF speculation pushed XRP to a June high on Sunday. And while it's pulling back today, the fundamental setup remains bullish for anyone with a longer time horizon. Now, let's talk about the elephant in the room. The whale activity that's been absolutely insane in the past 24 hours. We've seen multiple $50 million plus Bitcoin long positions opened, including one whale who opened a $53 million 20 times leverage long position. When you see this kind of size and leverage, it tells you that the smart money is extremely confident about the direction of the market. But it's not just the long positions that are interesting. It's also what's happening with the institutional flows. We saw $150 million in net inflows into Bitcoin ETFs on June 8th, which is a significant acceleration from the previous week. At the same time, we had a dormant Bitcoin whale who hadn't moved coins in 2 years suddenly purchased 250 Bitcoin for $26.37 million. When dormant whales start moving, it's usually a sign that something big is about to happen. The liquidation data is equally telling. We're seeing reduced liquidation pressure compared to the previous week, which means that the leverage positions are better positioned and there's less risk of a cascade liquidation event. This is crucial for understanding the next 24 hours because it means that any upward move is less likely to be met with forced selling from liquidated longs. Now, let's get into the fundamental factors that are driving this setup, because understanding the why behind price movements is just as important as understanding the what. The biggest catalyst on everyone's radar is the CPI data that's dropping Wednesday morning at 8:30 a.m. Eastern. The market is expecting core inflation to rise to 2.9% year over year, up from 2.8% in April. Here's where it gets interesting from a trading perspective. If the CPI data comes in below expectations, we could see what analysts are calling a 70 to 170% surge in Bitcoin. That might sound crazy, but when you consider that Bitcoin has already broken above key technical levels and institutional money is positioned for a move higher, a positive inflation surprise could be the catalyst that triggers a massive short squeeze. On the flip side, if CPI comes in higher than expected, we could see a rapid reversal back to the $104,000 support level. The 10-year Treasury yield is already at 4.5%, which is creating some headwinds for risk assets like crypto. A hot inflation print could push yields even higher and force money out of crypto and into bonds. But here's the nuanced view that most mainstream financial media is missing. The relationship between inflation data and crypto prices isn't as straightforward as many people think. Yes, higher inflation can be negative for risk assets in the short term, but it also reinforces the long-term narrative for Bitcoin as a hedge against currency debasement. The key is the Federal Reserve's reaction function and whether they signal more aggressive tightening or if they maintain their current stance. The geopolitical backdrop is also crucial for understanding the next 24 hours. The US-China trade talks that started today in London are being watched closely by crypto traders, not because crypto is directly affected by trade policy, but because these talks influence global risk sentiment. President Trump's comment that the meeting should go very well has already boosted risk assets across the board, and if we get positive headlines from these talks, it could provide additional tailwinds for crypto. The China angle is particularly interesting because of the deflationary pressures we're seeing in the Chinese economy. Consumer prices fell 0.1% year over year in May, and factory gate prices dropped 3.3%, which is the steepest decline since October 2022. The People's Bank of China has already responded with rate cuts and liquidity injections, which typically benefits risk assets globally, including crypto. Now, let's get into the specific trading strategies and technical triggers that you need to watch in the next 24 hours. For Bitcoin, the key level to watch is $106,851. This was the resistance level that Bitcoin broke through during its God candle move, and it should now act as support. If Bitcoin can hold above this level, especially during any volatility around the CPI data, it suggests that the breakout is legitimate and we could see a continuation toward $110,000. The next major resistance level for Bitcoin is at $108,000, which coincides with some significant options positioning that I've been tracking. If Bitcoin can break above 108,000 with volume, the next target is $110,000 to $112,000, which would represent the next leg of the bull market that many analysts have been predicting. On the downside, the key support level to watch is $104,000. This level has been tested multiple times over the past month and has held each time. If Bitcoin breaks below 104,000, especially on high volume, it could signal a deeper correction toward $100,000 or even the $97,000 level where the 50-day exponential moving average is sitting. For Ethereum, the critical level is $2,540. This has been acting as resistance for the past week, and a sustained break above this level could trigger a rapid move toward $2,600 and potentially even $2,700. The Ethereum ETF flows are providing fundamental support, and if we see continued institutional buying, ETH could outperform Bitcoin in the next 24 hours. The support level for Ethereum is at $2,490. This level has been tested multiple times and has held, but if it breaks, we could see a move back toward $2,400 or even the $2,300 level, where more significant support lies. One strategy that's working particularly well in the current environment is what I call institutional following. This involves monitoring ETF flows, whale wallet movements, and corporate treasury announcements to gauge where the smart money is moving. When you see MicroStrategy announcing another $110 million Bitcoin purchase at the same time that Bitcoin is breaking key technical levels, it's not a coincidence, it's a coordinated strategy. Another approach that's been profitable is using the correlation between crypto and traditional markets to your advantage. The correlation between Bitcoin and the Nasdaq has been running around 0.75 on a 30-day rolling basis, which means that when tech stocks are performing well, crypto tends to follow. With the trade talks providing a boost to risk sentiment, this correlation could work in crypto's favor over the next 24 hours. For those of you who prefer a more technical approach, the current market structure is providing some excellent scalping opportunities. The volatility has increased significantly, which means that the intraday ranges are wider and there are more opportunities to capture quick profits. The key is to use proper position sizing and risk management, especially with the CPI data creating potential for significant volatility. One thing I want to emphasize is the importance of staying flexible in the current environment. While the technical setup looks bullish and the fundamental factors are supportive, crypto markets can change direction quickly, especially around major data releases like CPI. Having a plan for both bullish and bearish scenarios is crucial for successful trading. The options market is also providing some interesting insights into what traders are expecting. The put-call ratio for Bitcoin options has been declining, which suggests that traders are positioning for upside rather than downside. Additionally, the implied volatility has been increasing, which means that options traders are expecting significant price movement in the coming days. Looking at the broader crypto ecosystem, we're seeing some interesting developments that could impact trading in the next 24 hours. The SEC's Crypto Task Force is holding a roundtable on DeFi today, and while regulatory discussions don't usually move markets immediately, any headlines coming out of this event could create short-term volatility. There's also the ongoing saga with various token unlocks and governance votes that could impact individual altcoins. Aptos is unlocking 1.79% of its circulating supply worth $53.61 million on June 12th, which could create selling pressure. Similarly, Immutable is unlocking 1.33% of its supply worth $12.82 million on June 13th. For traders who are looking at the next 24 hours specifically, I would recommend focusing on the major cryptocurrencies rather than trying to catch moves in smaller altcoins. The liquidity is better, the spreads are tighter, and the technical analysis tends to be more reliable. Bitcoin, Ethereum, and maybe Solana should be your primary focus. Risk management is absolutely crucial in the current environment. While the setup looks bullish, we're heading into a major data release that could create significant volatility in either direction. Position sizing should be conservative, and you should have clear stop-loss levels defined before entering any trades. The worst thing you can do is get caught in a large position when the CPI data creates unexpected volatility. One final point I want to make about the next 24 hours is the importance of staying informed about global developments. The crypto market doesn't exist in a vacuum, and events like the US-China trade talks, Federal Reserve communications, and even geopolitical developments can have immediate impacts on crypto prices. Having multiple news sources and staying connected to the crypto community on social media can give you an edge in reacting quickly to breaking news. As we wrap up today's analysis, I want to leave you with this thought. The next 24 hours could be pivotal for the crypto market. We have Bitcoin breaking out of a bull flag pattern, Ethereum testing key resistance, institutional money flowing in, and a major data release that could act as a catalyst. for the next leg of the bull market. The setup is there, the fundamentals are supportive, and the technical analysis is pointing higher. But remember, successful trading isn't about being right all the time. It's about managing risk and positioning yourself to benefit from high probability setups. The current market structure is providing exactly those kinds of opportunities for traders who are willing to do their homework and remain disciplined in their approach. The key levels I've outlined today: $106,851 for Bitcoin and $2,540 for Ethereum, are your guideposts for the next 24 hours. Watch how price reacts at these levels, monitor the volume, and be ready to act when the technical triggers are hit. That's a wrap for today's 24-hour crypto trading analysis. If this breakdown helped you understand the current market dynamics and prepare for the next day of trading, please hit that like button and subscribe to Boni's Life for more precision crypto analysis. Drop a comment below and let me know what you think about these technical setups and whether you're positioning for the potential CPI-driven breakout. Until next time, keep your charts open, your risk managed, and remember, in crypto, the next 24 hours can change everything. This is Boni signing off, and I'll see you tomorrow with another deep dive into the markets that matter. Stay profitable, everyone.